Good day, ladies and gentlemen. Do you know that not all demand and supply zones are created equal? Okay, so many of you that trade with supply and demand, you would notice that there are sometimes you take a trade from a supply or a demand zone and then it plays out perfectly well. Whereas there are some other times you take a trade from a supply and demand zone and it just does not, move in your favor. Things don't play out in your favor. In this video, I'm going to be telling you the reason why that is, and then you can, work on that in order to always choose the right supply and demand zone. The thing is, not all demand and supply zones are created equal, as I have said. Okay, so what's the difference? I see a lot of supply and demand traders taking, marking out zones that do not have a consolidation. If your zone does not have a consolidation, the probability of that zone playing out is actually low. Okay, so there should be some form of consolidation before market pushes in a certain direction. That is what is going to make you choose this zone as your supply zone. Also, in the sense for demand zone, there should be some form of consolidation before market pushes upwards. So this consolidation region becomes your demand zone. Okay, so when price returns there, you're looking to take a buy trade. So that's the way it should be. Don't go picking zones that you don't have any form of consolidation before the push. Okay, so the thing is, there are some zones that don't have a consolidation before the push. Those zones could actually play out. I'm not saying they won't play out, but they are low probability. That's why I said not all zones are created equal. The one that has a consolidation has a higher chance of playing out compared to the one that does not have consolidation, because sometimes price could be moving in a downtrend, for example, and then it starts moving in an uptrend and pushes, aggressively in the upward direction. All right. So some persons will come and mark out a zone here. But if you check, this region looks like a V shape. Okay. All those zones that look like V shape, I'm telling you, they are low probability compared to the zone that, maybe price was moving in a downtrend. Then at some points, price consolidated before pushing upwards. This consolidation region is a very solid region. It's a more, what's it called, effective region to mark as your demand zone. Why? Because there was a consolidation. That consolidation tells you that big players are actually, accumulating their positions. So they will be interested in protecting that position. When price comes there, they will place some other, they will place some more orders there when price returns there. Okay, so don't go out, marking only V-shaped supply and demand zone. So if your demand zone, sorry, if your supply zone looks like this, you can see this is like a V shape. This region is like a V shape. Then you mark it out as your supply zone. It's low probability. Also, if your zone looks like this, and then you come and mark out your region here as your supply zone, this is low probability. I'm not saying it won't play out, but the probability of it playing out is a bit lower compared to you having something like this. Price was coming down, okay, coming down. Then at some point you have this consolidation, then it pushed up. Fine, this is what we want to see. These kind of zones play out more. So I'm going to give you a few examples, as I always do. I don't just teach with illustrations without giving you examples. So if you are not a new viewer of my channel, I always have examples ready for you. Whatever concept I'm teaching, I always have examples ready. Okay, so I've marked out some nice supply and demand zones which you are going to be seeing me point out and talk about. Okay, so this is my first example. What do you see playing out here? This is accumulation. So price is accumulating around here. Then all of a sudden it pushes in the downward direction. This is the kind of zone we want to see. This is the kind of zone we want to see. We want to see the accumulation before the push. It increases the probability of that, that zone holding. Okay. So these are little secrets that a lot of persons don't know, and they end up saying supply and demand don't work, or what's it called? Everything is knowledge. You just have to get the right knowledge. Okay. So when price returned there, let's see what played out. When price returned there, you can see the way price is pushing in the downwards direction after tapping into the zone, respecting the zone perfectly well. Okay, the zone was respected. We had a push to the downside, then it came back to retest the zone, showing you that that zone is very strong. Then price pushed in the downwards direction. You can see all the down trade you would have caught. Okay, so all of this is for my first example. Let me go to the second example now. This is for a demand zone. What do you see playing out here? Accumulation. Then all of a sudden we had a push to the upside. Now this push to the upside, you can see how aggressive it is. We had bullish candles following each other. Okay, bullish candles back to back following each other. All right, so the fact that you have a lot of bullish candles right here, what does that tell you? That tells you that that zone is a very, very solid zone. Okay, and there was accumulation before the zone. All right, so what do? We wait for price to return to that level and then we take a buy trade. Okay, so price returned to that level right here and then pushed in the upward direction. Okay, so you see that very solid zone. Why? There was accumulation before the zone. So this is our second example. Let me look for my third example. Third example right here. Accumulation, push. One thing you would use to know a good zone is, you know, the push away from the zone is usually aggressive. It's either you have big candles coming from the zone or you have small candles following each other back to back, okay, with little to no pullbacks. All right, so you can see the way these candles were pushing, you had no pullback, so just pushing aggressively, showing you that a lot of selling took place at that level. Okay, so when price returns to this level, we are looking to sell. Perfectly respected. So you see this price returned to this level and then pushed in the downwards direction. Besides, let me give you some info. This is GBP USD and I'm on the 15 minutes time frame. Okay, GBP USD 15 minutes time frame. Go to your charts and check. So these zones work, but you need to know what you're doing. Okay, like I said, it's all about knowledge. If you're a new viewer and you're getting value from this video, please subscribe to the channel. This is what we do. I give you info which you might not even find on other channels. Okay, so that's my second example. Now I have one more example right here. You can see what do we have playing out here: accumulation and then price displays to the downwards direction. But if I were to take this kind of trade, do you know what I would do? I'm going to scalp. I just need a few pips. I'm not staying in this for a long time. Why? Because this is a weak zone. Why is it a weak zone? But you just said there was accumulation before price pushed in the downwards direction. Yes, accumulation and then price pushed in the downwards direction, which is supposed to make it a solid zone. But the reason why I'm telling you that it's a weak zone is that if you look at the manner with which price pushed in the downwards direction, if you look at the manner with which price pushed in the downwards direction, you would notice that this one is different from the others. You can see that we had pullbacks along the way. Telling you that the supply zone is not that strong. It's still going to be respected, but it might not give you, as much pips as the others would have given you. Okay, so what do we see playing out? Price returned there, respected it. Okay, price returned, respected it, tried it again, then started pushing in the downwards direction, but it only went as far as this level, then it started moving up. Okay, can you see? So showing you that this also is a supply zone, but it's not a solid supply zone. Now let's look at the difference. Okay, what do we have here? Price pushed down but started having pullbacks, showing you that there's weakness in the selling momentum. But look at the others I showed you, those ones that played out perfectly well. What do you notice? Bearish. There's this long column of bearish candles showing you aggressive selling took place at that level. So this is a solid, solid supply zone. Okay, it even came as far as taking out this low. All right, showing you that it's very solid. It took out this low. I'm talking about after price hit the supply zone, it went down to take out that low. So you could have targeted this low and it would have played out for you. Okay, let's look at this this demand zone. What do you see playing out in the demand zone? Look at this bullish candle. There's aggressive column of bullish candles. So when you have it like this, it shows that your zone is very, very powerful. Okay, so you can look when price returns to that level. When price returns to the level, you can look to take your profits at this top. The distance price covered before coming back to the level, you can take your profit there. This will definitely be cleared because this is a solid demand zone, since you had this big column of of bullish candles. I'm trying to give you, instances on what could make a level very strong, and and what could make a level not that strong. Okay, we've talked about there should be accumulation before you have the big push. Okay, now I'm talking about the nature of the big push. If the nature of the big push is such that you have some kind of pullbacks in between and it's showing you as though it's not aggressive enough, just know that you can actually take that trade, but let it be a short scalp. Don't take the trade looking to take out the opposing liquidity. It might not get there. Okay, and that's what happened with the last example. So look at this one also. I think this was caused by news, so definitely you have this aggressive push. So you can target this low when price returns to this level. You can target this low as a take profit position. Okay, you can see, let's see, I'm looking for where price tapped into the other one. Where is it? Okay, so you can see when price tapped into it, you can see how far price went, taking out the low of that other level. You can see price just kept going downwards and downwards, so it would have definitely taken out the low of the other one. But look at this last example that I gave you. You can see that price pushed down, came back here, but did not take this low. Price did not take this low because the nature with which price came down was such that it was not aggressive enough. Okay, we did not have a long column of bearish candles. Okay, we had some kind of pullbacks, in between, showing you that the move is not aggressive enough. See, just a few bearish candles, then you had a pullback, a few bearish candles, pullback, a few bearish candles. So shows you that it's not solid enough. So this will just tell you that when price returns to this level, yes, you can take your trade, but you do not expect it to take the opposing liquidity. Just get a few pips and get out of the market. Okay, so if you got any value from this video, please subscribe to the channel, turn on the notification bell. I'll see you in the next video. Thanks for watching.